Okay, let us now understand the concept of actual cost insofar as it relates to demerger. Now first let us understand what is the meaning of demerger. In a demerger, what happens is that let's say there is a company A, and company A has two units or undertakings as it's called for tax purpose. Now what happens in this case is, suppose company A decides that this is the business where I want to remain and this I want to transfer out. So what it does is that it will transfer this unit under a code scheme to another company. And this company can thereafter continue to carry on the business which was hitherto carried on by unit 2. So what happens is, suppose this unit 2 again had certain assets, let's say plant and machinery, tax WDV 1000. So the question which comes up is, what is the value at which company B will claim depreciation on this? This is dealt with by the explanation to the actual cost. Let's read the explanation. Where a capital asset, as pointed out number of times, it has to be a capital asset, is transferred under a court-approved scheme of demerger by the demerged company to the resulting company. So this company which is transferring the unit is called the demerged company. And this company which is receiving is called the resulting company. So where a capital asset is transferred under a court-approved scheme of demerger by the demerged company to the resulting company, actual cost in the hands of company B shall be taken to be the same as it would have been if the demerged company had continued to hold the capital asset for the purposes of its own business. So if company A would have continued to use this asset for its own business, whatever value would have been ascribed, whatever value would have been there in the books of company A, which in our example is 1000, will be the same in the hands of company B, provided that such actual cost shall not exceed the written down value of such capital asset in the hands of the demerged company. So even if you accounted for at a different price, it cannot exceed the tax written down value of this asset in the hands of company A.